Mark, first of all, congratulations on the championship last week here. I'm sure you still have to be reveling in the glory.
Oh, trust me, I'll revel for a while, but thank you very much. Yeah, it's been great. It's been fabulous.
Yeah, I mean, this is a team where, a lot of folks looked at this team a few years back and it almost seemed lost. I mean, when you teamed up to buy this team, I think it had the worst record in the NBA. I think it only won about 16 games. And here you are, just a few years later, you're talking about a team that's not only title holders, but of course, just the value of the team has just increased exponentially. This is a relatively small market team out there in Milwaukee. When you talk about the sustainability, not only of just winning, but to have the attention, the ticket sales, the merchandise sales here, what are you looking towards next year and beyond to keep that going?
Well, it's exactly what you said. We were the worst team in the league when we bought it. I think a lot of it, we built a new training facility. That was number one. We built a new stadium. And that's been huge, I think, for us. And I think as everybody saw, if you were watching the finals, we have this area in front of our stadium that literally, I think for the finals game, had about 60,000 people. So we're one of the only, I think we're either the only team or one of the only teams that could accommodate that many people. We had literally about 85,000 people in the stadium and outside, which I think is the first time for the NBA. But I think for us, if you're talking about, the way to sustain it is if you keep winning, I think we'll be able to sell more season ticket more season tickets. So that would be great.
Well, so what type of bump have you seen so far out of this? I mean, obviously, just all the attention you heaped on Milwaukee, all of the attention, of course, heaped on Giannis Antetokounmpo, and just the general idea here that you are now in a spotlight that Milwaukee really hasn't seen since you go back to, the old days with Kareem Abdul-Jabbar or Lou Alcindor.
No, you're absolutely correct. First of all, I want to congratulate you on being able to say his name because it's hard. So I thought that was great.
Yeah.
But it's actually great for the city. I mean, you hit it on the head. It's great for the city. It's great for the state. It's made people sort of now notice Milwaukee. It's great for Giannis. It's great for our team, our coaches. So I think it's been massively popular because I think they've connected. I've been saying all along that this is America's team. I believe it. I mean, I really do. I think people love Giannis. They love what we've been able to sort of put together. So, I sort of look forward to the future and hope that we can continue at least on the road that we're on.
Mark, this isn't so much a business question, but sort of a personality question, a performance question. We're looking at today the news of Simone Biles over in the Olympics, same as we see with Naomi Osaka. Talking of mental health, when you've got so much pressure on a certain player such as Giannis, how do you ensure that he feels supported through that? How you encourage all of your players when they feel such responsibility?
Well, I think we try to at least surround everybody with a staff that is extremely supportive. So I think for Giannis, and it's hard. I mean, it's exactly what you said. There is so much pressure on everybody. But you hope that your teammates are able to help you. You hope your coaches. So, I try to do my bit. I go out there and say, come on, let's go. So I don't know if that's enough. But to be honest with you, I think what we try to do is really just try to put the right people in front of them to help them in trying to accomplish what they need to do.
And in terms of accomplishing what they need to do and also what you need to do as a business owner of this, talk to us about the partnerships, the brands, the endorsements. How much do you think you continue to build from a revenue perspective now and dine out on all of this?
Well, I think ultimately, because of what's happened, you've just got all these different companies who want to associate with us, which I think is great. And in essence, what we're trying to figure out right now is who to partner up with, what to do over the course of the next year. So I think as we're sifting through all the different proposals, we'll figure that out in the next couple of weeks.
Mark, we're taking a look at the markets today and, of course, some of the headlines coming out of China. I think we'd be remiss if we didn't bring up the comments in May when you said that China looked like a good investment at this time. Do you still stand by that?
I do. I think for what we're doing and investing out there, it actually is. And the reason it is because there's a lack of capital. And that lack of capital is enabling firms like ours to be able to dictate pricing. So, for what we're trying to do, really what you want is you always want a lot of noise. You want people to be nervous because the more nervous they are, less people are going to be investing there. And for someone like us that's got long-term capital, we can end up doing exceptionally well out there.
But how do you measure the fundamentals of a company with a stroke of a pen? Beijing changes the rules.
Right. So what we do is we invest in sort of liquidation value in the asset value of a company. So when we're investing, we're lending money on a senior basis. So it's kind of hard for asset values to go down. I think when you're talking about with a stroke of a pen, that's much more for the equity value of these companies. It's not going to be on the debt side.
Well, let's talk about some of the distressed investing. And I guess it's been a relatively good investment, at least here in the U.S. During the pandemic. A lot of folks who made bets on companies that a lot of other folks had sort of left for dead. That's certainly been a relatively profitable play for some folks here. As we sort of move to the next phase of this economic recovery here, where are there opportunities in that space?
Well, look, I think the U.S. is kind of hard right now. There's less, I would say, distress opportunities. The economy's doing great. You're going to have GDP, which is going to be somewhere between sort of 3 to 5%. So for what we're doing, it's really going to be specialty lending. It's lending money to people who can't borrow or they've got issues. Where we're seeing the opportunities is really in that space. We're seeing the same thing in Europe, and we're seeing the same thing in Asia. It's a need for capital where banks aren't there. So it's not. It could be all different industries, but really what it is, it's a company that's got an issue and they can't get traditional financing.
You were talking about the difference, of course, between equity valuations and then the debt investing in China. Just a follow-on there. Do you trust the accounting of the companies coming out of China if they can change the equity valuations with risk from Beijing? Does that not impact the debt valuations?
It would if what we were doing was investing in those companies in China. Really what we're doing is we're going to buy loans. So if, it's companies that are already in trouble, you're buying sort of, distress loans, specialty loans. You're doing in jurisdictions like Hong Kong and Singapore. So I think for us, really what we're doing is just buying after there's already been all these problems. We're not doing it in the beginning when everything looks great. It's always usually towards the end when the issues have already come out, and therefore we know what we're buying and we know what the asset value.
Are you expecting plenty more issues to come out of, in particular, China at the moment?
I love issues. The more issues they are, the better it is for us. And I think you are going to continue to have issues coming out of China.
What about in the U.S. then, with the Federal Reserve that comes tomorrow that continues to seemingly want to support the economy no matter what? We see areas of, frothiness, dare I say it, whether it's in the public markets, whether you see it in the housing markets. But of course, the new focus is jobs, perhaps, rather than worrying about asset prices. Does that mean that the opportunity to get into distressed debt is that much further off in the United States?
Well, that I think you're absolutely correct on. I mean, it is. It's harder because the Fed is continuing to sort of make it easy for people to borrow. And if it's easy for people to borrow, there's not that day of reckoning. So that's why I said for us right now, the only thing we can really do in the U.S. is where we're lending money, where we think we're oversecured, to people who need to borrow, and they can't get traditional financing. But you're absolutely right in what you're saying. With what the Fed is doing, their focus is very, very much on jobs, even though I've never seen it, and I don't think we have, where the economy is doing great and the Fed keeps on making sure that people can borrow at pretty much zero.
Has the Fed eroded your price discovery?
Yeah, the Fed's making things difficult for us, but I've sort of learned, don't fight the Fed. It's a losing battle. They've got more money than we do, so we're trying to stay out of their way.
What about some of the alternative assets, Mark, here? I mean, you talk about not fighting the Fed. A lot of people, of course, have gravitated away from traditional treasuries and some of the traditional investments that would sort of be tethered to a more normalized Fed and monetary policy cycle, whether you're talking about crypto assets, real estate, and other leverage-type loans. are there assets out there that maybe you think can sort of be put on the same pedestal as, I guess, Treasuries?
No, I think treasuries are still the safest investment. For us, our focus is really always going to be, if we're lending on the real estate side, it's after there's been a default, or it's when we're able to put money in at a pretty senior level. We're not as much focused on what's going on in the equity markets or what's happening in the treasury market because it's not anything we can compete with. For us, it's really going to be what's the asset value. I think on the crypto, that's hard. I mean, I've invested personally in crypto, but it's not anything our funds are going to do. I think on the real estate side, we're going to keep on lending money to companies and have those assets backed by the real estate. But it's a difficult time here in the U.S. Just because of the amount of capital that's out there.
Will you be sticking with crypto? What do you make of also NBA Top Shot? I mean, that's a particular non-fungible token area that must parlay very well with your two interests.
Well, look, I think it's great. There seems to be this tremendous amount of interest from sort of the younger generation. So I think that's an asset class that keeps on growing. And I'll keep on, for me personally, I'll keep on investing in that.